The average 30-year fixed rate is hovering around 4.46% according to Freddie Mac. You add the rates uptick to soaring home prices, and on average, that implies a mortgage payment higher by about $500 per month since March of 2021. Rates won't be going down by much for some time, and while homes are not getting cheaper either, inventory will also dramatically recover, or not anytime soon. It all translates to real pressure on buyers' qualification and on lending options and lending programs. More about that at some other time. In other news, the Fed, as expected, has increased the Fed fund rate, their benchmark rate, by 0.25%. But more importantly, everybody was listening out and had their ears to what the commentary was by the Fed chairman, Jerome Powell, at the press conference following the meeting. Everybody was looking out for clues on additional Fed moves. The Fed has only a couple tools in their shed to address inflation. One of those things is obviously increasing the Fed fund rate, which is the overnight rate money is being borrowed from the Fed to banks. And second is their status quo of their balance sheet, reducing the balance sheet or increasing the balance sheet. And they've, in the commentary, said they're going to be reducing slowly on their balance sheet to hope that mortgage interest rates are not going to react too bad going higher. Speaking of inflation, on the producer price index, so on the wholesale level, inflation was reported at 0.8% higher in February for a year-over-year change to 10% on annual basis, which is a record high. If we take out the food and energy prices, which are the most volatile, that revision is at 8.5%. In housing news, existing home sales declined in February to an annualized pace of 6.02 million units, so just around 6 million. Last year, there were 6.02 million units sold, which was a record year. And with forecasts by Logan Mahtashami, a chief economist at the Housing Wire, he thinks that because of prices going higher, a lack of inventory, and again, rates going higher, he feels that there's going to be only about 5.84 million homes sold in all of 22. So a little decline from last year. Rental prices, meanwhile, rose 12.6% on annual basis in January, according to CoreLogic's single-family rent report. Finally, but not least, the unemployment rate, or the unemployed applications for initial unemployment, dropped a little bit last week, for giving us a total of 1.98 million people collecting unemployment, a tenth of what it was back in the midst of COVID. Builder confidence declined 2 points in March per National Association of Home Builders, and that fell because of concerns on future home sale expectations. Again, that is a common thread, as you can hear, but also challenges with supply chains and labor costs, as well as geopolitical situation worldwide. Housing starts, which measures the start of construction on homes, increased 6.8% in February for an annualized rate of 1.77 million homes sold, to be sold, or to be ready to be sold, which is the highest in the last 16 years. Builders are finally catching up with the demand. With new construction and the new construction cycle that it takes before these homes all hit the market, we're going to have to wait a little bit longer. That's all I had for you this week. Beata Bukowski.